let's take a closer look at the investing and financing sections of the statement of cash flows here. So you can see up here kind of what a basic template would be for those. So you add any cash receipts from sales from long-term assets, or we subtract purchases of long-term assets. And if we were to draw a basic T account of our fixed assets, you can see here that our beginning balance would be on the debit side, and then we would add any acquisitions. We would subtract through a credit depreciation expense and the book value of any assets that were sold, and that gives us our ending balance for our fixed assets. Under the financing activities section, we are going to add any cash receipts from the issuance of stock, subtract purchases of treasury stock, or add the sale of any treasury stock. We would also add any cash receipts from the issuance of new notes and bonds payable. Now I have a thing here for payment of notes payable and payment of dividends. Let's go ahead and look again at what would the T account look like for notes payable. Well, it starts with a credit balance, then any payments we make on those notes would be debited to the principal amount, and we would credit the issuance of any new notes in order to calculate an ending balance for our long-term notes payable. Our dividends, the way we would have to calculate dividends, if you remember your statement of retained earnings, started with a beginning balance of our retained earnings. We added net income as a credit. We would subtract dividends as a debit, and ultimately then our ending balance and our retained earnings would be the credit. So sometimes we have to calculate the amount of dividends that were declared by reviewing this retained earnings section. Let's look at just a quick example. It says compute the following items for the statement of cash flows. Number 1, the beginning and ending retained earning balances are $43,000 and $73,000 respectively. And then net income for the period was $59,000. So let's figure out how much our actual dividends would have been for that particular entry. So if we draw a T account of retained earnings, and it gives us our beginning and ending balances, which is said were $43,000, and then the ending balance, I'll draw down here, was $73,000. Net income was $59,000. Well, net income increases my retained earnings, so it's going to get added as a credit. And then the question is, so what are my dividends? Well, if I add these two up, I get $102,000 maybe? Let's see, 43 plus 59, looks good. And then minus the ending balance of $73,000, and that tells me that I have a $29,000 decrease. That is going to be the amount that I paid out in dividends to my stockholders, $29,000. Let's look at number 2 here. And this one is just a little bit more complicated, but let's read it. It says the beginning and ending fixed assets net balances are $104,000 and $108,000 respectively. So we can do the same thing that we did with our dividends above, and we can draw a T account for our fixed assets. And the beginning balance will show as a debit of $104,000. And then the ending balance will show as a credit here of $108,000. Alright, then it says depreciation expense for the period was $16,000. Remember, that's going to reduce our fixed assets. So that will be a credit. And then acquisitions of new fixed assets totaled $35,000. Well, that would be added here on the debit side, any acquisitions. Fixed assets were sold at a $5,000 loss. What are the cash proceeds of sale? Okay, well, we're still missing something here, and it's going to be the book value of the assets that were sold. And that is actually going to be a credit. So we have to figure out how much that actually is. So if we add up our two debits here, we're going to get $139,000. The 104 plus the 35,000. And then we subtract the 6,000. That gives us something is wrong. My zeros are off. Hang on a second. Okay, let's keep going. I had an extra zero in there that I got rid of. So the difference between those now is 133,000. And we have 108 balance. So that means that the book value of the assets that I sold here were $15,000. If you add up your debits, subtract your credits, you should get 108,000. You can double check my work there. So $15,000 is the book value of the assets sold, but it says those assets were sold at a $5,000 loss. So what were the cash proceeds of sale? Well, if my assets were 15,000 book value and I took a loss, take that 15,000 minus the $5,000 loss on sale, that tells me that my cash proceeds in this particular example were $10,000.